Let me ask you something. What if I told you there's a company in India that earns money every single time you invest, not when the stock goes up, not when you make a profit, just when you participate? That company is CDSL. Here's the twist. Even after having one of the strongest business models in India, this stock has fallen almost 40% from its highs. So, what's going on here? Is this a rare buying opportunity or is the market seeing something? Let's break it down. Welcome to Stock Report India, where we do honest, data driven analysis. Before we begin, one important thing. This video is for educational purposes only. Please do your own research and consult a CB registered advisor before investing. Alright, let's get into it. Most people think your shares sit with your broker. They don't. Your broker is just an interface, an app, a middleman. Your actual shares, they are stored in a depository. And in India, there are only two, CDSL and NSDL. That's it, just two. Think of CDSL like a bank locker, but for your investments. Every share you own, every mutual fund unit, every bond, it's all sitting in CDSL system digitally. And the numbers, they are massive. CDSL manages over 17 crore Demat accounts. That means a huge chunk of India's investors are connected to this one system. Now, let's talk about how CDSL makes money, because this is where it gets interesting. Three main ways. First, depository services. About 78% of revenue. Companies pay CDSL every year just to keep shares in digital form. It's like a subscription, predictable, recurring. In second, transactions. Every buy, every sell, CDSL earns a fee. Third, data and KYC. Every new investor onboarding, CDSL earns there too. 10 crore records and growing. Here's the key insight. CDSL doesn't need markets to go up. It just needs India to keep investing. More accounts, more trades, more IPOs. That's the engine. Now, the numbers. Revenue from 196 crore to over 1000 crore. 37% growth. Profit 11.5 crore to 506 crore. 38% growth. Debt 0. Free cash flow every single year. Zoom into recent quarters and the story changes. Growth is slowing, profits are falling, and the stock from 2000 to nearly 1100, a 40% fall. Why? Three reasons. Impo, market slowdown. The COVID boom is over. Less trading means less revenue. Earlier, no competition. Now, investors have a choice. That advantage is gone. Valuation, BDSL was expensive, very expensive, and when growth slowed, the stock corrected hard. So now the real question, after a 40% fall, is CDSL cheap? Short answer, no. But this isn't a normal business. It's a duopoly, a market backbone. That kind of power doesn't come cheap. Let's simplify. Deposit is zero debt, strong moat, retail dominance. The risks, high valuation, slowing growth, rising competition, balanced. It's not perfect anymore. So, what's the verdict? CDSL is not broken. It's one of the strongest financial infrastructure plays in India. But the stock ran ahead of itself. For long term investors, this rewards patience. For short term traders, this can test you. If India keeps investing, CDSL wins. But remember, it's no longer alone. If you made it this far, you now understand this business better than most investors. Because most people panic, very few understand. If you want more honest analysis, hit subscribe. Drop a comment below. Are you buying CDSL or waiting? Until next time, stay informed, stay patient, and invest wisely.